Well, saving up for a down payment can be difficult enough, but a bad credit score can also have an impact on your home ownership goals. Here to break down what we need to know about our credit scores is Everything Financial's Peter Sashecki. Good morning, Peter. Good to see you.
Nice to see you, Carrie. Good morning.
So something that people are obviously talking about this morning, the Bank of Canada has lowered its key interest rate. So what are we going to notice and what kind of impact will we see on mortgage rates?
Well, mortgage rates, we'll talk a lot more about that next week to see what the fallout is. But the immediate effect is on home equity line of credit. So if you have that type of mortgage, it's down a quarter point. If you have a variable mortgage that is also tied to a floating interest rate, it's down a quarter point. So those people are seeing differences right away. As far as the fixed mortgages, we're going to save that little teaser for next week because there's been a lot happening in the last few days. And this change will just affect those things even a little more.
Yeah, a lot of people are very interesting to know more about that. Okay, let's talk a little bit more about credit scores now. What is considered a bad credit score?
Well, let's put it this way. A really good credit score is 900. So if you're down in the 4, 5, and 600s, 600 would be mediocre. But if you're down way below that, that's a bad credit score. I'd say you want to get into the mid 7s and then into the 8s would be, that's getting into a better credit score. And there's some easy fixes to get a good credit score.
Okay, so first of all, what do those numbers mean? What do those numbers mean?
Well, yeah, there's a lot of factors that go into them, but let's do this simple for a short segment. The better the credit score, the better the interest rate on a lot of non-secured loans. So we talk about the mortgage being a secured loan because it's tied to your house, but the non-secured loans, like you're going to get a car loan or you're going to the local big box store or whatever to get a new windows or something like that, or new cabinets, and they'll give you a loan. So those type of non-secured loans where you're borrowing money, you want to have or a car, you want to have a really good credit score to get a better interest rate. So that's the key on the day-to-day borrowing. You need a good credit score to get a good interest rate.
How do those numbers get calculated?
That takes an hour, Carrie, but there's so many things in it. But a lot of it is very simple. The easy part. It's based on how are you paying off your bills? How are you carrying debt? Are you servicing your debt properly? The better you service your debt, the better you pay it off. And here's the key one. The less of the debt you use. So if you're given approval for a large amount of debt, like credit cards, say your credit card limits all add up to $100,000 and you use $10,000 of that debt, your credit score is going to be really good. But the same person who says has $20,000 of credit limits and they use the same $10,000 and maybe their ability to pay is the same, their income is the same, they're going to have a bad credit score. So the less of the debt you use, the better your credit score will be. That's the simple way to explain it.
Okay, so let's talk about the 3 bad milestones when it comes to credit and the solution for that.
So bad milestones of credit would be, well, I'll give you the simple one. First off, not paying your payments.
Okay.
So not paying a payment would be a simple thing. If you're not paying your payment, you're in trouble. People think that paying a minimum payment is enough. Paying a minimum payment, Carrie, is not enough if your limit is low and you're only paying a minimum payment. So that would be a bad solution. And being overdrawn all the time on your credit. There's people who do that. They're constantly overdrawn. They're constantly going into warning, into defaults. And your credit can skyrise. I mean, huge. Like the bad credit number, it's fast. But you can fix your credit so easy within a 3 to 4 month period just by getting on track with those payments, making sure you pay more than you're supposed to. But when the credit company offers you a larger limit, if you have the discipline, Carrie, take the limit, but don't use the limit. That is the fastest way to stick a pin in this and say, I'm going to start getting my credit score improved. And check it. Oh, here's another one. Just people don't forget. Don't always get your credit checked. Don't think if I apply for a loan here, here, and here, and here, it's going to help. There's the one that hurts you the most. There's one of the big things that hurts you because it looks like you're going for more and more and more credit when maybe you're just trying to find a better deal.
Okay.
Don't start applying everywhere. It's bad.
Okay, really good information this morning. Peter Sashecki joining us from Everything Financial. Thanks, Peter. Have a great Wednesday.
Thanks, Carrie. Well, yeah, we'll see you next week.